Welcome to the Italianpreneur Podcast. I'm your host, Pietro Ferracini, a startup founder with a passion for practical knowledge. Join me in weekly conversations with young and experienced entrepreneurs where we learn from their mistakes. Brian, I would like to welcome you to the Italianpreneur Podcast. And I'm a huge fan of you and your sort of like financial and investing philosophy. So I would like to share this with my audience. So why don't you start and you give us a little introduction of yourself?
Sure. Wonderful to be here. Thank you very much for having me. So I graduated from college in 2004 and had no idea what I wanted to do with my life. I have friends and family in my life that knew they wanted to be a physical therapist or an engineer or whatever when they were in like high school. And I was like, how'd you figure that out? Like I'm still like, I had no clue. So my major in college was business and healthcare. So I joined a startup medical device company out when I graduated from school. Through sheer luck, that company went on to be hugely successful, and I was in sales for them for just about 10 years. One huge benefit of being in sales was that I was in my car 30 to 40 hours per week, which sounds awful if depending on your personality. But I used all of that time to listen to podcasts, listen to audiobooks, listen to investor conference calls. I just became very interested and obsessed really with money, personal finance, investing, and specifically the stock market. So during that time, I basically taught myself everything that I know about finding companies, vetting companies, the mindset that's needed to invest. And I'm just really passionate about studying that subject for myself, and equally importantly, teaching new investors all of the lessons that I learned along the way, because I basically picked it up by just like a hodgepodge of finding bits of information here and there. So I'm really passionate about helping other people get to where I am financially and education-wise with money where I am today.
Well, Brian, let me tell you that is beautiful. Just the way you put it, it's a great sort of like vision and way of doing things. So good job for nailing that one out. And let me ask you this question. Before we get into your sort of process of picking stocks that you want to keep for a long time, why don't we talk a little bit of what do most of the people get wrong about money? What is it that is just so difficult about it that people don't get?
So many things. I mean, really, if you think about the way that human society and consumerism is structured, especially the way that it's structured today, it's all designed to make us bad at money. So many of us are taught absolutely nothing about money or personal finance in school. I would count myself in that category. I mean, I literally have an MBA in finance, and I would say that even with all of that schooling, the amount of information that I've taken from that education that applies to actually investing is minuscule. Like the overlap is very small, and that's with a concentration in finance and an MBA. But more importantly, so many of us aren't taught about money growing up that we really learn everything we know from our parents. And our parents weren't taught anything about money growing up because they learned it from their parents. So there's this huge lack of financial education that's really built into our society. And then when you layer on top of that, excuse me, the fact that companies exist to market to consumers to get them to buy their products and services, and the fact that humans are social animals that are always comparing themselves to what's in their environment. And when you layer in the fact that credit has been easier to come by, and things like credit cards exist and car loans exist, and all of those things have been normalized, if you don't work at it, it's extremely easy to live a very fancy lifestyle entirely on credit. And if you do that, it always feels good in the moment and it feels normal. But long term, like finance becomes your enemy and time becomes your enemy because you're paying for today's luxuries with tomorrow's money. So it really the onus is on a lot of us to educate ourselves about what money is, how money works, and to have the discipline to enact the principles that actually lead to long-term wealth creation. But it's no surprise that so many people have credit card debt or student loan debt,
Yeah.
or they're in jobs that they don't like, because that's the way that society is set up.
All right. Well, totally agree with that, Brian. It is also one of the reasons why I'm slowly getting interested into investing in finance, even though I'm dyslexic and dyscalculic. So like for me, numbers are even more complex than from the average person. But still, this understanding of how society works just pushed me to learn more about it because I don't want my future to be in the hands of someone else. I want to control it as much as possible. So that's one of the reasons that I'm getting involved into it. But you touched upon a very interesting thing. You talked about debt, and I have this feeling that a lot of people out there don't really have a concrete understanding of what really debt is. Can you try to give like sort of a definition of it, or like can you make it more real for our listeners?
Debt is just borrowing money from somebody else to fund some kind of expenditure today. And as I said previously, our society, and America in particular, has become very comfortable with the concept of debt. It's very normal for people to borrow money to buy a house. That's been historically the number one way that we borrow money. But more, even on top of that, people borrow money to buy cars. People borrow money to go on vacations. Your credit card makes it very easy to borrow money for funding your normal consumption lifestyle. Borrowing money to pay for education. That's a huge industry. But what you're doing when you're borrowing money is you are literally obligating yourself to pay this entity back in the future. And you're obligating yourself to pay them back for more than you're borrowing from them today. Like it's almost akin to obligating your future self to work and then selling your future self's work at a discounted price. Like that's what you're doing with debt. So it's unfortunate that has become so normal and so accepted in our society. So in general, I'm a very anti-debt person. So I teach people, the principles that I expound is to basically eliminate debt from your life, all of it, just get rid of it. Your life will become so much better when you're debt-free. Now, having said that, I do recognize the realities of life, and people do need debt for certain functions, and not all debt is created equally, depending on the terms and the payback period and the interest rate and all that kind of stuff. But in general, if you adopt the philosophy in life of I'm going to avoid debt as much as possible and pay back the debt that I have, I think you'll live a financially healthier life than the opposite.
Beautiful, beautiful. Thank you very much for explaining that. I had in mind exactly what you just said, but you just said it more beautifully. So thank you for that. One other question I have is, so why should the average person get into investing? Why is it so important for everyone to start investing? I'm not talking about the stock market, but investing in general. And why, if you think so, saving is not enough? Why people do need to invest?
To me, investing is the exact opposite of debt. You're taking consumption that you could be doing today, you're delaying it into the future in exchange for the ability to consume even more in the future. So it's like giving your future self money that your future self can use to pay for whatever they want. You're like prepaying for things in the future, but rather than selling your future income at a discount, like you do with when you're taking on debt, you're buying things in the future at a huge discount. So I've learned to love investing, specifically investing in the stock market, because it's the easiest way, or the easiest, most accessible way for anybody to take a small, consistent amount of income for themselves that they generate over their lives and turn it into a life-changing amount of wealth in the future. I mean, family tree changing amounts of wealth in the future. To your point about why can't you do that with savings? Well, historically, the rate that people have earned on their savings has been very small, a few percent here and there. Sure, there was a time in America in the 1980s when you could earn a double-digit return on your savings. That world doesn't exist anymore, and moreover, that world only existed because inflation at the time was also extremely high. So, what matters when it comes to setting aside your money is the future purchasing power of that money, and purchasing power is a factor is based on the value of whatever currency that you're holding. So let's say you're holding the US dollar. I don't have the exact figure in front of me, but I'm just about 40 years old, and $1 when I was born is worth dramatically less today than when I was born. So the purchasing power of that dollar has eroded hugely in the roughly 40 years that I've been alive. And if you just saved your money, the purchasing power of your money will not keep up with what's going to happen to the purchasing power of the dollar over time. Let me say that differently. So the purchasing power will erode, and a savings account most likely will not preserve that dollar's purchasing power. If you invest, you can earn a higher return than the inflation rate over whatever period you're talking about, and that will increase your dollar's purchasing power.
Okay, absolutely, absolutely. That makes total sense. I hope that the people listening to this grasp this concept, because I think it's very important. And I've been talking with a lot of people recently about investing. A lot of people ask, okay, how do you start investing? Well, and a lot of people say that they don't need to invest. They're okay. They're putting money aside and so on. So that's why I'm asking this question, because I feel that a lot of the listeners need to understand that investing, it is a tool that can help you in the future. It's not some like abstract things that a few people do, and it's not bad. It's going to help you build your wealth in the long run. But you need to make some sacrifices today, because you need to put that money aside that you cannot use today. So we got that one out. But let me quickly ask about your quality score and anti-fragile checklist that you have created. Can you tell me a little bit the story of that, and how do you use it to make your stock investment decisions?
Sure. There are lots of ways that you can invest. And even within the stock market, which is one category that you can invest in, there are a lot of ways that you can invest within the stock market. You could invest in mutual funds. You could invest in index funds, or you can invest in individual stocks. I personally believe that the vast majority of people that have, especially those with very little interest in investing, can do extremely well for themselves if they just stick with broad-based index funds and just put money into there. However, if you're an investing nerd like I am, and you literally get pleasure out of studying businesses, studying companies, and finding companies that can multiply your wealth at a faster rate than the market, then I think you're a candidate to take on stock picking. So that's where I've spent a lot of my time, because there's a lot that you have to know in order to pick stocks and invest in individual stocks correctly. Now, if you study the stock markets, and once you get into it, you learn that there are thousands of companies that you can invest in, literally thousands to choose from. So how do you go picking out, well, I want to invest in this one, but not that one? Previously, as stock ideas were coming my way, I was keeping all of the attributes about these companies in my head. And I would say, oh, I really like this company's balance sheet. I really like it that it's free cash flow positive, but I don't think it has a long growth runway. And another company would come along and I'd say, wow, this company has a really strong competitive advantage and is run by its founder. However, the founder doesn't own a bunch of stock and its customers are cyclical. And I was trying to weigh all these factors in my head, and it just became an overwhelming task. Finally, I got smart enough to think, maybe I should write these things down. So what I did is I started by creating a list of all of the attributes that a company could have that I would find attractive. For example, I wanted to have lots of cash and no debt. I wanted to have a very high gross margin. I wanted to have a strong competitive advantage over its competitors. I wanted to have a long runway for growth, etc. So I listed out all the positive attributes. Then I simultaneously listed out all the negative attributes that I want nothing to do with. So if a company has customer concentration, in other words, it gets a lot of its revenue from very few customers, that's a bad thing in my book. If a company is highly reliant on interest rates or commodity prices to do well, that's a bad thing. If a company is diluting its shareholders at an egregious rate, which to me is over 5% per year, that's a bad thing. So again, I made a list of all the attributes that I don't like. Then through trial and error and feedback with other investors, I created a scoring system for myself so that now I can take any company that I'm interested in investing in and run it top to bottom through my investing framework. And as I go down the list, I'm assigning it points based on how well it does in any given category. When I'm done with that, I get a score at the bottom, and then I subtract points based on the factors that I don't want to invest in. The net result of this process gives me an output score, which tells me how interested I should be in investing in this company, because the higher the score, the more attributes that it meets in the companies that I'm looking for, and the lower the score, the less attributes that company has. And after I did this hundreds of times with hundreds of different companies, I come up with a list of companies that score extremely well on my checklist. And if I'm a believer in my checklist and my process, which I am, doesn't that mean I should put my capital in the companies that are a best fit for my investing style and keep my capital away from those that are doing that? Well, of course. So that's what my checklist system is designed to do. And that's what I think it does today. So if you give me any company that I've never heard of before, I can, in about an hour or two, research that company, use it to fill in my checklist. And within an hour, I can tell you if I'm interested in researching that company more and maybe even will buy it, or if I'm not.
Beautiful, beautiful. Well, I'm personally a user of your checklist. And a very happy user, because I think it is a great structure for just analyzing businesses. Because you said it before in other interviews or even on your YouTube channel that I invite people to check out, that it's a mental guide to analyze the companies. So just make sure that you don't forget any of those steps, because they're very important. And as you said, you build it for yourself. But I have to say that for me, it works exceptionally well, because I think I have sort of a good match with your strategy, your long-term investment strategy. I believe in it. I think it's a very smart way to look at the market and to think about your future wealth. So it matched perfectly with me. But I invite everyone to check it out, and I will leave it in the description of this episode, just as a mental guide for your future investments. If you're looking to buy stocks, I think that is a great tool. And I have to mention that you need a little bit of financial knowledge in order to go through that checklist, because there are certain things that you need to go look out in the financial statement of the companies, which makes total sense. So if you're investing in a company, you want to know their financial situation. You need to be able to read their financial statements, which can be a bit overwhelming at first. But if you're passionate about it, if you want to put the time in it, it's totally worth it to get that understanding.
And on my YouTube channel, we have made videos that go into each of the three major financial statements in detail, and we break them down for brand new investors to learn. But to your point, what I really like about the checklist isn't necessarily the final score, although that's certainly a factor. What's the real value of the checklist is what you just said. It forces you to think through each aspect about a company that I find appealing or not appealing. So we always like to say that the process of taking a company through this checklist is more important than the final score. Because even if a company comes back on my checklist and I realize, okay, it's not quote unquote investable right now, if going through that process, I learned, wow, the potential here is just massive, or there's rapid room for this company to improve over time, I still might make an investment. But with that score and going through this process, I'll know what things to look out for, so that if that thesis proves to be wrong, I'll have the documented proof that, well, I knew this was going to be an issue based on my research.
All right. Totally cool. Totally interesting. So let's switch gears a little bit here. I want to take you into my story a bit. So I come from like a medium wealthy family in Italy, where both of my parents worked. My dad brings more money in than my mom does, but in my family, there has always been this taboo that where money is not a topic that can be discussed between the father and mother and the children. It is this very harsh wall that exists, which puts, like a big separation in between. And also between family members is not a topic that is well accepted. So this is my personal like point of view from the Italian culture. But I've been speaking with a lot of people because I've been traveling a bit, living in different countries, and it's I'm not the only one. There are a lot of people out there that have this taboo within their family, and I've seen myself the first year of university when I lived by myself alone. I had a budget that my parents created for me, and I had to manage my money, and I failed completely. I was not ready to understand what is a good spending and what is bad spending and how to manage money. And I have a feeling that this is the result of a lack of communication within my family and my upbringing. So I would like to know, understand your take on this. What do you think about it? And what do you think about this finance taboo that exists?
I would say that we grew up in very similar families. It sounded like you. My money was not something that we ever really discussed in my family. We did talk about it occasionally, but those were very rare occasions. The good news that I can say from my own upbringing is while my parents didn't necessarily talk about money, they largely showed through their own actions about good money management principles. They didn't take on debt to buy vehicles, for example. Whenever we went places, they would always bring food with them as opposed to buying it. So, and they taught me how to, look for deals and that kind of thing. So I had the core, many of the core foundations were there. But to your point, I had no idea how to invest. I had no idea how to really set up a budget for myself and live by it. That's something that I learned on my own because I am just intensely interested in the subject, just like some people are, say, fitness nuts. Other people's are really into sports. My thing that I'm just interested in is money and finance. So, like you, I think it's bad that so many families in the world, money is a taboo topic because money is a topic that affects every aspect of our life. It's like health. Like imagine growing up in a family where you never talked about nutrition or you never talked about healthy eating, or you never talked about cooking or anything like, oh, don't talk about that. It's a taboo category. Well, that's exactly what happens with money. With money. Money impacts every single aspect of our life, yet it's something that many people are not willing to talk about. The good news is nowadays, thanks to the internet, it's never been easier for average people to find useful, good, positive information that can help them to manage their money better. However, they do have to take that step of going out of their way to learn about it and be interested in it, which is just something that most people aren't interested in or willing to do.
Totally, totally. And I had the chance to stumble upon that kind of by chance, by talking with some friends and getting to know people that did have that drive into finance, into investing, and it was kind of contagious to me. So I had this luck, but some people that don't get this opportunity, they need to go and look for resources themselves. So I want to start and give the one resources that got me started, and I think a lot of people can relate to this. It's a book that I got in the audio format because I'm dyslexic, so audio is always better for me than reading. And it's a Rich Dad Poor Dad. It's very, very famous, and a lot of people read it. And it's just makes everything so simple, so easy to understand, and it really helps you to grasp the concept of investing and why is it important for you. So why don't you give our audience some resources as well where they can get started?
So, like you, Rich Dad Poor Dad was the first book that I read about money. And
All right.
while I don't agree with many of the investing principles that are put in there, I wholeheartedly endorse the mindset and the broad-based principles about everybody's in business for themselves. There is such a thing as good debt and bad debt. You should focus on buying assets and use those assets to become wealthy over time. Those principles are timeless and classic, and I wholly endorse them. Beyond that, a couple other books that I highly recommend to new people. One would be The Millionaire Next Door, which is a book that is a big study of millionaires in America, and it found out how they live, what they spend their money on, their occupations, how they play quote unquote offense and defense with money, and the differences between families that have wealth and families that have not. So that's a wonderful book to learn about. Another is Think or Grow Rich by Vicki Robbins and Joe Dominguez. That's a story that's very much about the philosophy of money and how humans spend huge amounts of their time here on earth working for money when they should focus on having a good life, and how they can align their spending to allow them to do that. And then a final one would be Think and Grow Rich by Napoleon Hill. Again, a book mostly about mindset and the way that successful people and entrepreneurs think, because so much about money is mindset. It's it's the way that rich people or successful people develop their mindset to look for opportunities and think of money as a tool to help them achieve the things they're going after. Whereas normal people just look at money as a way to pay for consumption. And the mindset shift is by far the most important thing.
All right. Yeah, let's talk a little bit about this mindset shift. Like, what okay, you need to start thinking of money as a tool, but how can you make this shift? Like, did you have sort of like an idea of how can we help people make this shift besides some reading materials? So like, what is the original concept behind it? Do you have sort of like a definition of it, or can you elaborate a bit more on it?
Sure. For the mindset that I've developed about money has really come from being interested in the subject and reading many of the books that I talked about. If on my website, which is brianferoldi.com, I have a resource tab there that lists kind of like the 10 top books that influence the way that I think about money. But for me, the thing that really shifted my mindset was reading those books and then meeting and interacting with other people that are interested in money and have their own philosophies on money. One category of money and finance that has grown a lot in recent years that I wholeheartedly support is something called the FIRE movement, FIRE, financial independent, retire early. And it's a group of people that are hell-bent on taking control of their finances to such a degree that work becomes optional. They have so much money amassed, and ideally at a young age, so 30 or 40 or 50 years old, that you can you can quit your career and you can spend the remainder of your life however you want to. For many people, that includes continuing to work, but maybe they work in a different field, or they take a job that has nothing to do with pay. It has everything to do with working for a company that they want to, or some people just volunteer for the rest of their life. So that mindset, no matter what your current view of money is, if you study people that have that mindset and have done that, I guarantee that you will do things differently, or at least never look at money the same way.
Wow. All right, Ryan. Thank you for that tip. I hope it really resonated with people. So this is my last question I wanna ask you. Like, what is the one advice that you have with young people out there? They want to start building their wealth. Like, what is the one thing that they must do?
Educate themselves, period. All positive money change starts with education. Educating yourself about what money is. How do wealthy people, how did people that became wealthy and started from nothing, what was their view on money? How did they spend their money? What traps exist out there, or what mistakes have people made with money that keep them poor, or chained to a job for the rest of their life? How did the markets work? How does real estate work? basically study, and learn as much as you can. And as I said before, there's never been an easier time for people to learn about money or stocks or personal finance or investing. So many wonderful resources out there, from podcasts, to YouTube, to blogs, to books. You don't even have to spend any money these days to learn these concepts. But that to me is always step one. It's focus on self-education.
Beautiful. So let me end with this. You don't need to spend money in order to learn about money.
Correct. I wholeheartedly agree with that.
Right?
That's right.
You can find everything on YouTube and on the internet, which is, ready available at your fingertips on your phone. So, Brian, again, thank you so much for taking a moment of your time to speak with me. I hope this episode reaches a lot of people that can get impacted by our little conversation here, and hopefully they can start a journey which will take them to financial freedom, to a safer and more warm future where they don't have to worry about money, because that's exactly what we don't want.
Fantastic. Well, thank you for having me on, and for doing things like this podcast. Even just opening people up to the concepts that we talk about here is a huge first step.
All right, Ryan, take care.